Ballard Power Systems has announced a significant supply agreement with Sierra Northern Railway, a California-based rail operator, for the delivery of 1.5 megawatt fuel cell engines. This deal involves the provision of 12 Ballard FC-Move XD engines, which will be used to retrofit 3 diesel switching locomotives into hydrogen-fueled, zero-emission locomotives as part of Sierra Northern Railway's decarbonization efforts. The FC-Move XD modules are designed for heavy-duty applications and are noted for their reliability, durability, and efficiency, offering a sustainable alternative to traditional diesel engines without the need for expensive overhead catenary systems. This collaboration highlights the growing trend towards sustainable transportation solutions and underscores Ballard's commitment to advancing fuel cell technology in the North American freight rail sector. The initiative aligns with California's broader environmental goals to reduce greenhouse gas emissions and is expected to enhance operational efficiency for Sierra Northern Railway. The strategic partnership not only strengthens Ballard's position in the rail industry, but also sets a precedent for similar decarbonization projects in the transportation sector. The move is anticipated to have a positive impact on market adoption of fuel cell technology, reflecting a shift towards cleaner energy solutions in industrial applications.
Tradeweb Markets Inc., a prominent global operator of electronic marketplaces, announced a significant surge in its trading activities for May 2025, with total trading volumes reaching $55.4 trillion and an average daily volume, ADV, of $2.5 trillion. This marks a notable 33.3% increase in ADV year-over-year, highlighting the company's robust growth trajectory. Excluding the impact of its acquisition of ICD in August 2024, the ADV still showed a substantial 20.3% year-over-year growth. These figures underscore Tradeweb's expanding influence in the electronic trading space, particularly across rates, credit, equities, and money markets. The increase in trading volume can be attributed to Tradeweb's advanced technologies that enhance price discovery, order execution, and trade workflows, providing significant scale and risk reduction for its over 3,000 clients worldwide. This performance not only reflects the company's strategic acquisitions, but also its adaptability in a dynamic market environment. The reported figures, while preliminary and subject to final review, indicate a positive outlook for Tradeweb's continued expansion and its potential impact on market liquidity and trading efficiency. The company's ability to integrate acquisitions and adjust reporting methodologies further solidifies its position as a leader in the electronic trading industry.
Unite Group has proposed a revised acquisition bid for Empiric Student Property, comprising a cash and stock offer that has driven Empiric's shares up by over 6%. The proposal, currently under review by Empiric's board, includes an offer of 30 pence in cash and 0.09 new Unite shares for each Empiric share, based on Unite's share price of 855.5 pence prior to the announcement. This values each Empiric share at approximately 107 pence. The companies have entered into an initial engagement phase to discuss the proposal further, though it remains non-binding and subject to change. This potential acquisition highlights Unite Group's strategic interest in expanding its portfolio in the student accommodation sector, potentially enhancing its market position. The deadline for Unite to make a firm offer or withdraw is set for July 3rd, subject to extension with approval from the Takeover Panel, which oversees mergers and acquisitions in the UK. The outcome of this proposal could significantly impact both companies' stock performance and market dynamics within the student property sector. Investors will be closely monitoring further developments, given the strategic implications and potential market reactions.
Celebrite DI Limited, NASDAQ, CLBT, a leader in digital investigative solutions, has announced its acquisition of Corellium, an innovator in ARM-based virtualization software, for an enterprise value of $170 million, with $20 million converted to equity at closing. This strategic move, expected to close by summer 2025, is poised to enhance Celebrite's capabilities in digital investigations, particularly in securing and analyzing ARM-based devices such as iOS, Android, and IoT systems. The acquisition aims to strengthen Cellebrite's offerings in both public and private sectors by integrating Corellium's advanced virtualization technology, which allows for detailed interaction with virtual devices, enhancing the speed and efficacy of mobile vulnerability research and DevSecOps development, security, and operations. The transaction is anticipated to broaden Cellebrite's total addressable market, TAM, providing new opportunities in defense and intelligence sectors through enhanced digital investigation platforms. In the private sector, Corellium's technology is expected to extend Cellebrite's reach beyond traditional e-discovery and corporate investigations, enabling the development of next-generation secure mobile applications and IoT devices. This acquisition not only expands Cellebrite's technological capabilities, but also adds Corellium's expert team to its roster, potentially setting a new standard for digital security across ARM-based platforms. The deal awaits approval from the Committee on Foreign Investment in the United States and other customary conditions, with further financial contributions from Corellium to be disclosed post-transaction.
Colliers International Group Inc. has completed the acquisition of Tradeweb Inc., a leading Canadian commercial real estate services firm. This acquisition establishes Colliers as the largest commercial real estate services provider in Canada, significantly enhancing its operational capabilities. With the integration of Tradeweb, Colliers now manages over 95 million square feet of commercial real estate and oversees more than $15 billion in project developments. This move aligns with Colliers' growth strategy, which focuses on expanding its diversified service platforms in real estate services, engineering, and investment management to drive shareholder value. Historically, Colliers has delivered a 20% compound annual return and maintains annual revenues close to $5 billion, with assets under management exceeding $100 billion. The acquisition reinforces Colliers' presence in the North American real estate market and is expected to further bolster its service offerings and market competitiveness. As the commercial real estate landscape continues to evolve, Colliers' strategic acquisitions, such as that of Tradeweb, are anticipated to play a pivotal role in shaping its future trajectory, enhancing its ability to provide comprehensive solutions to clients and investors globally.
Bread Financial Holdings, Inc. has announced the early tender results for its cash tender offer concerning its 9.750% senior notes due 2029. By the early participation date of June 4, 2025, approximately $536.8 million in aggregate principal amount of these notes were tendered, significantly exceeding the company's tender cap of $150 million. The total consideration for the accepted notes is $1,071.25 per $1,000 principal amount, which includes an early participation premium of $50. Due to the oversubscription, a proration factor of approximately 77.538% will be applied to notes tendered at the clearing premium, meaning not all of these will be accepted for purchase. The settlement for the accepted notes is expected to occur on June 9, 2025, as long as the offer's conditions are met. The tender offer, which began on May 21, 2025, and is set to expire on June 20, 2025, will not accept any additional notes tendered after the early participation date due to the cap being reached. This strategic debt management initiative, facilitated by J.P. Morgan Securities LLC as the sole lead dealer manager, along with several co-dealer managers, aims to reduce Bread Financial's outstanding debt, potentially improving its balance sheet, enhancing financial flexibility, and reducing interest expenses. This move is anticipated to boost investor confidence and positively impact the company's stock performance.
Gray Capital has announced the launch of its $200 million Midwest Multifamily Fund, targeting $500 million in apartment asset acquisitions. This fund is tailored for institutional investors, family offices, and ultra-high net worth individuals, and aims to capitalize on the current favorable conditions in the multifamily sector. Spencer Gray, President and CEO of Gray Capital, highlights the increasing rental demand and tightening supply as key drivers for this strategic move, particularly in the Midwest markets of Indianapolis, Indiana, and Columbus, Ohio. The fund is structured to maximize investor profitability with a low asset management fee of 0.25% and an 85/15 limited partner general partner split. Gray Capital's $15 million co-investment, which represents about 10% of the fund, underscores its commitment and alignment with investors. With a focus on value-add and core plus multifamily assets, the fund offers a $1 million investment minimum, though individual investors can participate at lower thresholds directly through Gray Capital. This initiative leverages Gray Capital's extensive experience in commercial real estate transactions and its integrated property management platform, promising optimized revenue and cost management for investors.
Dyne Therapeutics, Inc., NASDAQ. Dyne is set to present promising preclinical data on its Dyne 302 therapeutic candidate at the upcoming FSHD Society International Research Congress. The data showcases Dyne 302's potential to improve muscle function in a mouse model of facioscapulohumeral muscular dystrophy, FSHD, a rare genetic disorder characterized by progressive muscle weakness. The treatment targets the DUX4 mRNA, aiming to suppress its expression, which is crucial since repression of DUX4 leads to muscle damage in FSHD patients. This development is significant as there are currently no approved therapies for FSHD, affecting thousands in the US and Europe. The presentation of these findings could influence Dyne's strategic positioning in the biopharmaceutical market, particularly in the niche of genetically driven neuromuscular diseases. Dyne 302's effectiveness in reversing severe muscle damage in preclinical models might bolster investor confidence and affect Dyne's stock performance, as it underscores the potential of their FORCE platform. The company's broader pipeline, including programs for myotonic dystrophy type 1 and Duchenne muscular dystrophy, further highlights its commitment to addressing unmet medical needs in neuromuscular disorders. Investors and stakeholders will be keenly observing regulatory feedback and subsequent clinical trial results to gauge the commercial viability of DYNE 302.
B. Riley Securities has announced the strategic hiring of Eric Doby as a senior managing director in its real estate investment banking group, highlighting the firm's commitment to bolstering its senior talent roster. With 25 years of experience in real estate investment banking, Doby brings a wealth of expertise in capital markets and strategic advisory services, having advised on over $40 billion in real estate transactions. His extensive background includes advising public rights and private real estate entities on mergers and acquisitions, portfolio transactions, and complex financing strategies. This move is expected to strengthen B. Riley's capabilities in delivering value to its real estate clients amidst a robust demand for experienced investment bankers. The addition of Doby, who previously led the real estate investment banking effort at Wedbush Securities and held senior roles at BMO Capital Markets and Deutsche Bank, aligns with B. Riley Securities' vision of providing innovative and client-centric solutions. His appointment is seen as a significant step in expanding the firm's influence in the real estate sector, leveraging his deep capital markets knowledge and strategic advisory acumen. As B. Riley continues to enhance its institutional-grade capabilities with entrepreneurial flexibility, Doby's expertise is anticipated to help clients unlock shareholder value through creative strategies, reinforcing the firm's position in the competitive investment banking landscape.
Saia, Inc., NASDAQ. Saia, a prominent transportation provider specializing in less-than-truckload (LTL) services, has released its operating data for the first 2 months of the second quarter of 2025. The company reported a mixed performance, with LTL shipments per workday declining by 1.9% in April and 3.2% in May, compared to the same months in 2024. However, LTL tonnage per workday showed a 4.4% increase in April, followed by a slight decline of 0.4% in May. Notably, the weight per shipment increased in both months, indicating a trend towards heavier loads being transported. These figures suggest a shift in market dynamics where fewer shipments are being moved, but with increased tonnage and weight per shipment. This could indicate a strategic focus on higher value or bulkier cargo, potentially impacting Saia's pricing strategy and operational efficiency. Investors and market analysts might interpret these results as a sign of resilience in the face of broader economic challenges, as the company continues to adapt to changing demand patterns. As Saia navigates these shifts, its ability to maintain or grow its market share will be closely watched, especially given the competitive pressures and external factors highlighted in its forward-looking statements.